people hear that and they're a little skeptical. But obviously the person, they're going to make money. Or what's kind of the, I hate to say catch, but there's obviously a catch to this at some point. Do they just assume that, for example, 90 days, same as cash, or zero? They assume during that 90 days, you're not going to do anything during 90 days, but at 90 days, you're probably not going to pay it off. And then that's where all the interest hits. Welcome, guys, to Houston Inside Out. I am your host, James J. And today I have with me Randy and Teresa from National Credit Federation. How are you guys doing today?
We're fantastic.
We're doing great.
Good. Thank you guys for being here today. I am really excited to get into the topic today, which we're going to talk in a little bit about, credit and kind of what you guys do for people, because in this market, in this day and age, in the real estate business and virtually any business, right? Credit is going to play some part of it. Even jobs in a lot of situations, employers check credit nowadays, So
right.
We're going to talk a little bit about that, and also just kind of give us some insight as to how you guys got into what you got into, a little bit about National Credit Federation for people who don't know what it is. Because basically you guys help people that have had some type of a financial crisis, and you got kind of help them get back on their feet.
Yes, absolutely.
Yeah. So
and I'll let Randy speak more on that.
Yeah. So give us a little insight as to kind of your background, Randy, and kind of what got you guys into the National Credit Federation.
Well, I have several friends that are in the real estate business, and they're the ones who first introduced me to credit repair. I have a financial advising background where I helped individuals with their financial, 401ks, life insurance, stuff like that.
Okay.
And this is just another way we can help people get into homes, like you said, qualify for jobs.
Yeah.
So we looked at, doing this on our own. But we decided to go with a franchise. So we bought into a franchise that's based out of Tampa, Florida, and we got into it, after we did all that.
Now, what was it about? Because there's a lot, obviously, like you said, you could have done it on your own. What led you guys to this particular company? There's a lot of different credit repair, credit restoration. What was it about National Credit Federation that kind of got you guys to the point of saying, I like what they offer, let's join them, let's partner up with that company?
Well, there's so many points, right? I mean,
yes.
You're right. We did a lot of research, and it's very easy to say, I can do this and figure it out. But what we found is that we really wanted a good, strong company that had it together. And not only did they offer amazing support, but they were very reputable. So, yeah. I mean, there's thousands of positive reviews.
Yeah.
There's a lot of people at arm's length for us, even as people in the industry who are needing that quick support. But most importantly were the reviews, and yes. Being that they have a high rating in the Better Business Bureau, and being very effective with what they do. That
right.
was, I mean, like I said, there's so many reasons, but the number one I would say would be just the great reviews that they had from the clients that they had already helped.
And the National Credit Federation has been around for over a decade.
Okay.
We've been featured on plus social media outlets, like she said, great reviews with the Better Business Bureaus.
Yes.
And having a franchise, we can go out and do the sales and marketing and network. And then we have a home office with dozens and dozens of staff members who actually dispute letters on the daily.
Mm-hmm.
So I'm not a one-man shop where I'm disputing letters, trying to get more business, not giving the clients what they really need.
Right.
Once we get them involved, we have a home office that's strictly for their service, 8 to 5 every day. They have a case manager assigned to them. So, I can go continue getting, meeting with new potential clients while we have a home office that's really taking care of everything behind the scenes.
Yeah.
Right.
So they can focus with our clients, and then our clients can also reach us at any given moment. So they have two, individuals that are working for them, and they know that they can get a hold of us at any time. Another thing that we just love about it is that our clients have access to a 24/7 portal. So they
Okay.
know what's going on. I mean, we've heard so many people share with us that they hire a credit restoration company. They don't know what's going on.
Yeah.
All they know is they keep, giving money every month. The mortgage lender doesn't know what's going on. The realtor doesn't know where the process is. So this is a really valuable tool for our clients to have.
Yes.
Not only do they have access, but a lender can even have access with the permission of our client. They can go online, they can see where their credit is at that time, how the score is increasing, things that may affect the ebbs and flow of our individual clients' credit score.
And everything we do in our home office is uploaded to the portal, so they can actually see actual letters that are being sent, received, everything.
Yeah. No, that's huge because you're right. I mean, I can't tell you guys, I've had so many clients in the past in real estate where, they've been working with some random company and they've given money and given money and given money and given money. And I mean, either very little to zero results or just, I mean, unfortunately in that business, there's a lot of people out there that just, they're just in it for the money, just to get some money. And they're really not in it for the right reason. They're not really helping people. So,
and a lot of companies, I'm sorry, go ahead, James.
No, go ahead. Go ahead, Randy.
No, I'm just saying a lot of companies that, just because you have a low score doesn't mean you're a good fit. So we do a credit analysis with all three bureaus.
Okay.
Before we even put them in the program, we want to make sure that we're going to be able to do something for them. The worst thing we want to do is, what we don't want to do is put someone in the program in 6 months, not get any results. We're going to get a bad name.
Yeah.
National Credit Federation would not have been around for 10 plus years if we were doing business like this. So first we got to make sure they're a good fit. And we can help them out before we put them in the program.
Right.
Now, how do you guys, when you meeting or talking with clients, what's kind of like the initial, because I think most people just want to know, okay, what's my score going to be in 3 months or how long is it going to take? Kind of take me through the initial process. Like, what do you do when you sit down with people to kind of give them, I guess, set the expectation as to what's going to happen over 30 days, 60 days, 90 days. And I know everybody's going to be a little different. Everybody's not the same. But kind of what do you guys do in to set that expectation for your clients?
Yeah, you're exactly right about it. Everyone is different. Every credit file is going to be different. So by law, a credit repair company cannot make guarantees of anything. I can't say I'm going to guarantee a house in 6 months. And if they are doing that, you're not with the right company because we're not going to tell you that. But we are going to sit down and pull all three bureaus credit report. And we're not going to do these free reports. Get your TransUnion score from this website. Get your Equifax from here. We actually have a partnership with Identity IQ where we pull it for $1, credit analysis of all three bureaus. We go through it. And the main thing, we want to find out what the customer's goal is. Are they just doing this to better themselves? Are they doing it to get a better interest rate on a car? Are they trying to get into a home? So every case that we look at is different, but we want to get an understanding of what the client is trying to achieve by increasing their score with us.
Right. And not only that, but we also hold our clients accountable as well. We remind them that while we are working to repair their credit, we want them to also give 5% and make sure that they are following, the recommendations that we're giving them, that they're not allowing any current, credit that they have go into collections. Because it doesn't do us any good working hard, working hours, and making those phone calls and sending out those letters and getting these collections taken off when 2 weeks later another new account hits their collection because they forgot that one on time or resolve those issues. So it's definitely a team effort for sure. We hold our clients accountable just as well.
No, and that's so important, Teresa, because people. I mean, you take two steps forward and 3 steps back. It's like, well, you got to do your part.
Yes. Absolutely.
Yeah. And if I don't know, we'll be, 6 to 8, we're seeing, good things happening, and then a new collection hits, T-Mobile or Sprint, bureaus. And then there's a 30, 40 point drop. And, you know, as a customer, you're going to get frustrated because you're like, hey, I just saw, you know, a 30, 40 point increase. Now I'm back to square one. But we give them the expectation, like, this could happen. You know, right now, you're not telling us anything. And maybe you don't know, but things could happen along the way of the credit repair. We could be in the 6th month and something hits. It's going to have an impact on all 3 of their scores.
Exactly.
Yes, I want you to guys to talk about this because I've had a lot of clients in the recent past few months, so actually not even months, really weeks, where what happens. So, for example, when people have a charge-off account, right? A lot of people want to take it upon themselves and without contacting somebody like a professional like you guys, people will contact the charged off account and pay it off. So what do you guys like? Give me a little advice for people if they've got a charged off account, for example, how, and again, I know this is a little general, so we can keep it that way, but because I think a lot of people just see it and they try and take it on their own and do things on their own, and they'll go pay off charge off accounts, but, or try to. What situations does it make sense or where it could actually hurt their scores if there's like a charge off, for example? Because I've had this happen in the last 2 weeks. I've had several people that have done this.
Yes, on charge-offs, negative collections that actually go to collections.
Yeah.
Do not pay it off. Do not contact them.
Yep.
You can have say you have a $2,000 balance on a collection account.
Yeah.
A derogatory item that's on your account. You could pay that off today, and the balance will be 0. However, it's still a negative item on your credit report.
Right.
Whether it's a $2,000 balance or a 0, it's still showing negative. It's still impacting a negative. It has a negative impact on your score.
Okay.
So what we want to do, for one, we want to settle for less than the 2,000.
Right.
We want to settle pennies on the dollar. So for one, we can settle much less than you just calling them up. And then 2, once we get it paid in full and settled, now we want to get it removed completely. So we don't want it showing a $0 balance on there, which it's great that you got it paid off and we settled it in 0, but it's still on there as a negative item. Now we're going to want to get it removed completely to really, you make a positive impact on your score.
See, I didn't even know that. Yeah, I mean, that's great information because I didn't realize that it doesn't matter if it's 0 or 2,000 or 3,000. The key is to get it removed because it still shows as a charge off, whether it's 0 or 2,000. You need to get it removed.
Right. It's still reflecting derogatory, correct.
And the thing is, a lot of people say, I have one negative item on my report. Well, you actually have 3 because there's 3 bureaus.
Right.
If I have someone that says, well, I have 5 negative accounts, well, there's 15 disputes we're doing because you have 5 on Equifax, 5 on Experian, and 5 on TransUnion.
Yeah.
So another thing people don't understand until we, inform them, like, hey, you got a couple of negatives, but you really have 6 because it's on all 3 bureaus. We want to get it off of all 3 bureaus, just not one of them.
Right.
Now, is there any logic to why, like, obviously we got 3 scores and every creditor does not report to all 3?
Correct.
Which is why there's 3 scores.
Mm-hmm.
This frustrates a lot of people, especially when I'm talking to people on the mortgage side of things. And, people will come to me and they'll say, well, I checked my credit score on Credit Karma, and I'm like, well, if you're applying for a mortgage, we're going to ignore Credit Karma, guys. It's just not the same. So 2 questions for you. Number 1, I want you to talk about like the differences between the algorithms as it relates to like you getting your score directly from Experian or TransUnion or Equifax versus you using Credit Karma, Credit Sesame, you name it, all because it's very different. And people think oftentimes, oh, well, I checked my score on Credit Karma and it was, 600. Usually it's not the same when I pull credit for a mortgage.
That's right.
Yes. I tell customers right off the bat, don't even look at those because I've seen them all 50, 60 points.
Yeah.
Those websites, they're in it for, their business.
Yes.
They're selling your information.
Yes.
And you're only getting, 1 score. You're not getting all 3 bureaus. Because a lot of times people are like, why do I have to pay $1, to pull my credit through Identity IQ? I said, because we want to get an accurate score of all 3 bureaus, not, your Discover card sending you Discover card, sends people every month their, their supposedly their FICO score.
Right.
That thing's been off 60, 70 points. So We go with, we have a partnership with Identity IQ for a reason, because it's accurate. And it updates, when you get the updates quicker and everything, when there are changes, you see that as well.
And trust us, there's been times where they brag about how beautiful their score is, because like Randy said, they received it from Dillard's.
Yes.
And then we go to pull it, and it's a big eye opener, right? And so we try to tell them the same thing, don't trust that, because you're going to be shocked when you go to visit your mortgage lender and try to get that loan, and they have to tell you, I'm sorry, it's not what you thought it was, right? So
yes. Yeah, so the algorithms between, it's the second part of this. Yeah, so the algorithms, the way it works for example, for a car. So you go apply for a car, and I usually tell people, listen, when you apply for a mortgage, it's probably the most thorough credit report you're going to get, because most of the other creditors, if you're applying for a furniture loan or whatever it is, usually they only pull one bureau number one, but it's not the same. The way, can you dive a little bit more into like what's different for a person applying for a car? Well, I don't know how detailed you can get into this versus obviously a mortgage being, to me, the most thorough credit report you're going to get. So why is it so different? Because this frustrates people when they go apply for a car. Because I've had that too recently, where they said, well, I went and applied for a car, my credit score was 640. And again, I always tell them, it's not going to be the same when I pull your credit for mortgage. It's not going to be the same.
Right.
Yeah, on the as far as the mortgage side of it goes, James, I know you guys use a system. That number is a little bit different. It's a single digit number. I don't know too much about that side of it.
Okay.
Like I said, we use Identity IQ to get all three bureaus. In the mortgage side, I think you guys are pulling a FICO?
We do, yeah. So we do most lenders are going to do tri-merge. I don't know anybody that doesn't do a tri-merge report. And then we just, we just take the middle score of the three. But I know people get frustrated because they bought a car 2 months ago and they over 640.
Yeah, the cars are definitely go ahead, Ben.
Well, what I wanted to say, my input in that is just, in layman's terms, as simple as it could possibly be. A dealerships, they want your business. They don't care that they're going to charge you 7% or something crazy, right? For a small little Corolla, right? We've had a client who was paying for her car the same amount as she could if she just fixed her credit, which she did. She ended up fixing her credit. That same monthly payment she was giving to that dealership was applied to now a BMW. She was so happy to have realized all this time I've been throwing away my money. Yeah. So what she did was she focused, and that extra money that she was spending to all these other creditors and lenders out there that were charging her an absurd amount of money, obscene amount of interest. Yes. She paid that. She stopped and she started investing in her credit restoration. And she was in the plan for quite some time, but she went out and got approved for a BMW, and it was at an awesome rate, and she was paying less than what she was paying on her other car. So what I try to tell people is, yes, you may have gotten approved for a vehicle, but you're paying extra because of that interest rate. Yeah. So, I mean, at the end, who really won? Was it truly you or that dealership? That's right. Mortgage lenders, they have to pull that credit report. They have to be a lot more thorough because this is a larger commitment. This is a larger amount.
No, that makes so much sense. I mean, you're right. I mean, $30,000 car versus a, $200,000 house. We're going to dig a little bit more deeper when we're pulling credit and looking at the risk. Cause I mean, everything kind of comes down to risk especially on the mortgage side of things. So, what I was going to ask you guys as far as like building credit, and again, I know this is a more general question. What like tips can you give people to be, if they're trying to build credit? Because I also have a situation where I have people that have absolutely no credit. Yes.
Okay.
Now we're back.
Glad we weren't live.
There we go. It's okay. Let's watch it. When you see this, you won't even know it. All right. So,
Back to you were saying about, pulling your credit through a mortgage company versus,
yes.
And like I said, we use Identity IQ. So when we do put someone in our program, they have to have a credit monitoring system or a monitoring that we can monitor, because we have to go in there. Our case manager is going to have to go in there, here and there. So they don't want to do a soft pull every time we got to go look at the credit.
Yeah.
So we use Identity IQ, and it is a monthly charge. But it's accurate. Like I said, when people go through a program, the Identity IQ scores, and then they go to get the mortgage, it's pretty much right on. When it's off, it's when they're, like you said, going to a car dealership, going to, Karma, Sesame Karma, what all these websites, they're going to be way off from the mortgage side of it. Sure.
Yeah, and I always, because I have so many conversations with people, and they always say, oh yeah, I got my credit card. First, where'd you get that score from?
Right.
Was it Credit Karma? Was it Credit Sesame? Open Sesame? Who was it?
Yeah. And they're like, hey, my credit's not that bad. I got a car loan. I said, you can get a car loan with a 5 score. You're going to pay 22% interest. A mortgage, that's not going to happen,
Yeah.
I always ask people, like, how much is your car payment? I mean, I can ask that one question. They say about $650.
Yeah.
What's your interest rate? 19. What are you driving? A 13 Corolla, I said, I always tell them, like she was saying, like, if you want a $700 car payment or a $500, after we're done, get a 3 or 4% interest rate, and you can drive a Lexus, BMW, for the same price you're paying for your Camry or Accord, Yeah. So they really, they can really, once they break it down, interest rates on an auto loan, they can really see, like, wow, I didn't realize how much money I'm throwing away.
Yeah, it's pretty sad because, and I think when it comes to vehicles, especially because people they just want it, right? And so they're just the excitement of just getting that car, and they're just oblivious sometimes to listen. Yeah, you got the car, and usually all these car dealerships, it's like, okay, what payment do you want? That's what they focus on. What payment do you want? And then they can kind of finagle anything and charge you, and you're charging, you're paying 18, 20, 25% interest in some cases.
Yeah, for 7 years on a 7-year loan.
I see it. It drives, when I pull credit reports sometimes on the mortgage side, it just drives me nuts when I look at some of these payments that people are paying for a car. And and it's not a BMW or a Benz. It's, it's a Corolla. Nothing against Corolla, but you shouldn't be.
It's a great car. I mean,
great car. It better be a great car, because they're stuck in that loan for 7 years.
It's insane. When I see these credit reports, I just shake my head. It's like, oh my goodness. So it is, it's mind blowing. But people, listen, this is why they need you guys to educate them about, listen, you're not winning on this. You're not winning at all. This is a terrible deal for you. So, so as far as like some tips that you can provide people for maybe building credit, because this is another situation that I come across a lot. People that have absolutely no credit, like those people that believe in cash, which is fine until you want to buy a house. Right.
Yes.
So what can you guys give people advice wise? Like, what can they do to maybe start? Because there are people that don't like to use debt, and it's all good until you want to buy a home, unless you're paying cash for the home, which most people are not going to do. So what can you do if you got somebody that has zero credit and they need to maybe look at, they're trying to get into a home, for example. Obviously you got secure credit cards, which are a whole nother story. But what do you do for people that have little to no debt, like to advise them to maybe to get their scores built up?
Well, I tell people, like you just mentioned, secured cards. That's one thing we can do. But to get a revolving credit card, go out and get that. If they don't have the credit to get that, then we go the secured credit card. Because that starts building credit immediately. We have a partnership with a secured card that actually starts with good credit to the bureaus, all 3 bureaus, before they even get the card in the mail. So that's a whole other thing.
Randy, stay on this for me, Randy, because there might be people that don't even know what a secure credit card is. So explain what a secured card is versus obviously a traditional credit card, so people understand.
Well, a secured card is, secured card is you basically put a deposit down. The one we have, for instance, you put $200 down, And whenever you close that card out, and we will get into that much later, but
Right.
you get that $200 back. But what it does, you have $200 limit,
Yep.
but it's actually your money.
Yes.
So there's no credit check, there's no hard pull, because they're not lending you any money.
Right.
Your $200 balance is your own money. So that's why it's called secured, because you're
Right.
giving collateral to secure that $200 credit limit. And then I encourage people to spend $30 or $40 a month, pay it off in full every month. That's going to build up your credit the quickest. 35% of your score is based on payment history.
Okay. What is a percentage? Because I always tell people that the other thing is, like, one of the biggest parts of the score is available debt versus what you're using. So what percentage of the score? Because I know it's a big percentage. So give me what the percentage is versus, like, what the percentage would be available credit versus what you're using, because that's a big one.
Yes, that is a very big one. If someone has, a couple credit cards, 2 or 3 credit cards, but they're all maxed out,
Yes.
immediately they can increase their score by getting that 30% or less balance at all times. So if they have a $1,000 limit, get it down below $300, keep it there, and moving in a few months, you'll start seeing immediate increase in your score just by doing that, and of course making the payments on time. I've had clients come to us like, hey, I need credit repair, and after reviewing it, they don't need credit repair, they just need to get their balances down.
Right.
If they have 4 or 5 cards and they're 80% maxed out, or 80 to percent to maxed out, and they have great payment history, I just tell them, hey, get these balances under 30% or less on all the cards, and you're going to see an increase in your score, and it happens every time. Works every time.
Mm-hmm.
Yeah, that's one of the things I will tell people. Man, I'm not a credit restoration expert like you guys, but I mean, I've done this enough and seen it enough. But yeah, I mean, people who got maxed out. Like, you guys are killing your scores. That's a huge one.
They think they're okay.
They
think that they're fine. That's the bad part, right? Well, I pay every month.
Yes.
I pay early sometimes.
Yeah.
Well, that's great. But the creditors are thinking that you are living at a maxed out line.
Yes.
So they're not going to lend you. That lender is not going to approve your mortgage loan that way. So people have a really hard time understanding that, and it's just a matter of coaching them. A lot of times they tell us, I had no idea. I didn't know, So that's what we're here for, though.
Yeah.
We work together with you, James. You teach them and educate them. You do a phenomenal job about that, and we work as a team at the end of the day.
Yeah. So that is one of the things I constantly have to let people know about is, you guys, you can't actually, even if you're not, it's just a perception that everything's maxed out. It's like you're not responsible with your money. I mean, that's kind of how it comes off.
Right.
I know. Especially on the mortgage side, right? That's how mortgage lenders look at it. They're looking at responsibility, and whether you like to have credit or not, if you want to get a mortgage loan, this is what we're going to look at. We're going to look at it and see, and the lender looks at it, maxed out everything. You can't manage your money well. That's how it comes across.
Mm-hmm. Mm-hmm.
So one thing I want to ask you guys, as far as things that you can do, maybe because I think a lot of people maybe they don't know that they could lower interest rates, or what, when does it make sense for a car, for example, for somebody, if they're paying a high interest rate. A lot of times they're only financing for maybe 3 to 5 years. I know there are some situations where people may be doing it longer, but when do you think it makes sense for people to refinance cars? If you guys maybe work with them and then maybe refinance, because there's always a cost in refinancing. I don't care what it is. There's a cost involved, but if they can lower the score enough, do you think it's worth it, or when would it make sense, I guess, to maybe refinance a car?
Well, on that, I don't encourage anyone to do anything while they're in the program.
Okay.
We're not completed, like 3 months in there, their score might be where they can get a better rate, but we're still working on some negative items.
Yes.
So until they're completed with our program, which typically is 6 months, I do have people who are in it for a year. Some people are in it for 4 months, but I don't encourage anyone to do anything until we're completed the process on our end.
Yep.
But once they're done, if they can save, $150 a month on a payment, I would highly encourage it to try to get refinanced
for
at a
sure.
lower rate.
Yeah, I heard an advertisement, and I just shook my head. This is probably about 2 or 3 months ago. It was radio. I think it was actually Sirius XM. I heard this ad. No, I take that back. It was local radio, and they basically said, "Hey, guaranteed to have." I can't remember the exact score, but we were talking about this earlier. And it said, guaranteed 700 or 720 credit score within X amount. I just shook my head. Like, how are they even getting it? How would you even have the gall to put that out there that you can guarantee a 700 or 720 or whatever? So that's one of those companies that I tell people, if you hear that, you need to run the opposite direction, because there's no way for any creditor or any credit restoration company to be able to make you guarantee like that. Because whether it take you it might take one person 3 months, it might take the next person 6 months. But it's good that you guys so your advice for people is just, once you get involved with the program, to stay put, because on my end as a lender, it's the same thing. When you apply for a mortgage, we want your financial situation to stay exactly the same until you close. When you start making changes to your bank account, or you start having large deposits, it just makes lenders nervous.
Right. Mm-hmm.
So for you guys, it's this: once you get involved with the program, just don't do anything. Don't go apply for new debt unless you guys obviously advise them to do something like that. You don't want people refinancing or doing anything during the program.
Correct.
That is absolutely correct. Like I said, they're going to have assigned case managers they're going to be there every step of the way. And, in the beginning, we tell them, you got to follow the directions of your case manager. But like you said, people go, during a mortgage, they'll go out and get a credit card. And you're like, what are you doing?
Or they're getting furniture.
They're getting a new screen TV and, whatever. But yeah, we have a case that makes, we'll stay on top of them. Like, don't go do anything, just follow our steps, and you're going to be in good shape when the program is over.
Yeah, I have had a client, actually probably more than one, that went and bought furniture during the process. People get excited. I just did a video about this probably a week ago. People get excited, and especially if someone's building a house, for example, because it's going to take 3 to 6 months typically. People, and this is one of the things I want you guys to touch on, because I talked about this the other day. When they see this zero, same as cash, and people think, oh, it's not a big deal. No, it is a big deal, especially when you're applying for the mortgage. So how does this zero, same with cars, because you see these 0% with the car financing, for example.
So you're saying, like, well, how does that work?
Yeah, how does this work? So people understand, like, when they say, when it's a 0% interest, like, people hear that and they're a little skeptical. But obviously the person, they're going to make money. Or what's kind of the, I hate to say catch, but there's obviously a catch to this at some point. Do they just assume that, for example, 90 days, same as cash, or zero? They assume during that 90 days, you're not going to do anything during 90 days. But at 90 days, you're probably not going to pay it off. And then that's where all the interest hits.
Right.
Yes, that's another thing. Like a great example is, Cons is a company that has a 90 days, same as cash.
Right.
99% of those customers are not going to pay that off in 90 days.
Yes.
And then the small they have a 36% interest rate.
Right. Yeah.
So you buy a big screen TV at these places for $1,000, you end up paying $2,300 for that TV when it's all said and done in 2 to 3 years. So yeah, those are definitely they definitely catch it's great marketing on their end.
Yes.
But people see that 90 days same as cash, like, hey, I have poor credit, but I can go get a sofa today and not put anything down and just pay it off in 90 days, and it never happens.
Yeah.
And those are the accounts that go to collections, and we're trying to get them off people's credit reports, but. It's very unfortunate. There's a lot of companies and car dealerships that I don't want to say take advantage of people with poor credit, but I personally feel that's what they're doing.
No, I agree. Yeah,
they're getting to sell, but they're basically knocking people when they're down.
Yes.
So I highly discourage my, customers to go that route and any kind of, try to build credit, try not to do it that way.
Yeah, no question about it. Yeah, I mean, no, they are absolutely taking advantage of people because they don't know. They just don't know. The more times I pull credit and talk to people on the mortgage side of things, it's amazing to me. But because, I'm in the business, you guys are in the business, and I think a lot of people just assume that people know basics of a credit report or basics of just credit period. And they do not know. They don't know. And so all the more reason for people to reach out to you guys to really get educated. Now, is there a website that you guys have, or is it just the company website where people can go to?
Yeah, so our website is www.nationalcreditfederation.com/Randy.
Okay. And I'll get that added onto the screen here, so people can reach out to you guys that way. Any other way that people can reach out to you guys if they've got questions or just want some advice or some things, whether it be social media? How else can people reach you guys?
Yeah. Directly, you can contact me at 832-368-4311 and via email, randy@nationalcreditfederation.net.
Okay.
Teresa is at 832-725-0581, and she can also be reached as well via email at Teresa, TERESA, no H,
okay.
at nationalcreditfederation.net.
Got it. All right. So, all right, guys. So yes, got it. Okay. So we'll get that out there, and then I'll make sure we shoot that out to everybody via social media channels as well. So. And then, we'll have to have you guys come on again because there's so many different ways to, or so many different things that we could talk about as it relates to credit. But in respect for your time, because we literally could sit here and talk all day about this. There's so much to talk about when it comes to credit.
Thank you. I know we do the same thing too. We always tell people, hey, just give us a call so we can help you fix your credit and fix your life.
Hey, James, I'm going to give you the email since you're going to edit this, but I gave you the wrong email. So my email is randy@nationalcreditfederation.com.
Okay.
And Teresa's is Teresa, TERESA, at nationalcreditfederation.com as well.
Got it. Okay. All right. So we'll get that added for people to be able to reach out to you guys. But yeah, literally, I mean, credit is like, people love to talk whether you're looking for real estate or not, people love to talk real estate and credit. It's a topic. It doesn't matter. Like, people are interested in those topics, no matter what area, no matter where you are in life, it's always a topic of conversation that people are interested in. So I appreciate you guys sharing your insight. But yeah, I will have you guys come on again so we can talk more about this. And is there anything that National Credit Federation do? Is there any type of maybe webinars or events that they do that you guys do during the year, anything like that?
There are some. We have a really great platform where people can go onto our main website and see some very informative videos.
Okay.
We can share with you as well. We have like a Credit 101 video that goes out, and a lot of people request that because it's very easy. It just gives you the basics about how credit works and how it affects people. But yeah, we do those quite often. Randy and I need to do another one, so maybe as soon as we get one done, we can also send that over to you.
Yeah, absolutely. Yeah,
and we do credit repair in 50 states. We are based here in Houston, so we will. If there's mortgage companies, realtor companies that have home buying seminars, we'd love to attend those and give some feedback on what we do and how we can help their clients.
Well, yeah, we're going to get together, guys. I'm going to get with you guys so we can do that here in our area. And for people that are outside of Houston, just check out the website for some videos. Reach out to Teresa and Randy if you've got questions, just need advice. But yeah, reputation is everything in this credit restoration business because there's so many come and go. They come and go. They're in it for the money. They just want some money and they're getting no results. So yeah, if you are looking to improve your credit, reach out to Randy and Teresa, guys. And National Credit Federation said reputation, you can't beat it. You want somebody that knows what they're doing and is not going to be
Thank you.
here one day and gone the next. So thank you guys so much. I appreciate you. I'll have you guys come back on, and we appreciate your insight on this topic. So thank you guys.
Absolutely.
Thank
It's been
you,
a
James.
pleasure. It's been a pleasure, James. Have a
Appreciate
great
it.
day. Have
All
a
right, guys,
fantastic
you
day,
too.
everybody.
Take care. We'll
All right,
talk
bye-bye.
soon. All right.
Sounds good.
Okay.
Bye.
Bye, James.